All right, folks, welcome. Let's get right into a little 3 at 3, shall we? This is where, of course, I give you unusual option activity, and wow, what a day of trading. Oh my gosh. I talked to a friend who I can't name because I promised him I wouldn't, but this has been the craziest 30 minutes on any given 30-minute bar that I've ever seen in trading crude oil futures. Oh my gosh. And that's not to say that I've called every single one of them right. I haven't. And when I've been wrong, I've been buried. And when I've been right, I've crushed it. So just like any other kind of trading, folks. It's all about mitigating your losses and pulling capital off the table when you've got winners. So, with that said, let's dive into 3 at 3. What you need to know is this is for educational and informational purposes only. That's why I'm talking to you right now. This is that crude oil futures contract, and oh my gosh, I mean, look at this thing, folks. Those those are 30-minute bars across there. And that's not based on what I do when I'm trading. I'm just showing you that just across the screen, this was 56. This is the June contract. This was 56. Today, it goes out at 11.58. $11.58, down $8.85, or 43%. What? Yeah. Well, yesterday we spoke about that they were going to pay you to take crude oil. And that's no lie, folks. You remember, many of you saw that crude oil traded down to negative $37.63 yesterday. No words for that. But that meant, by the way, that they would pay you $37 to take it. Take it, please. Well, so what happened today with the June contract falling off a cliff, as it did, because yesterday this contract closed at $8.85 higher than where it is right now. So with this one down 43%, how'd the rest of them do? There you have a look. May contract, it was up 46 bucks today. Yeah, that's right, $46. The previous settlement was, as I show you there, $37.63 negative. Put brackets around that. Negative. And where'd it go out today? Well, let's see. The last was $9.06. So as we all knew, crude oil isn't worthless. But if you got nowhere to put it, and you can't just come up with, again, Met Stadium, Jet Stadium, pick a parking lot at a Walmart and say, I'm going to fill up a bunch of RVs and drive them on over there. No, you're not. And by the way, 1,000 barrels of crude oil, every big contract at the CME is 1,000 barrels of crude oil. 1,000. Where the heck do you think you're going to put that? And it ain't like they sit there and they have them in the nice little barrels. That's just a measured amount that comes out. So you want to drop it into a rail car? Fine. You want to drop it into a truck or a tanker? Fine. You think you can bring a flatbed over there? First of all, you better have 1,000 barrels for them to put it in. And I don't imagine that they're just going to be real happy with, at Cushing dropping that hose into 1,000 barrels. That ain't part of the deal, folks. So what you need to know is the June contract went out at $12.02. You see them along the side. Far left side, that's the contract expiry. The May's done today. Done. Thank God. Done today. June, obviously different expirations all the way down. And then you see the volumes. I thought it was crazy when we saw the volumes of 1 million contracts yesterday out in June. Look at it today, 2 million contracts. You don't think this was the most active, the most focused on thing in all of the possible commodity areas? You think gold moving 1.5% was anything compared to this? My answer is no. No. But this was the trade. And this is where I was trading. And like I say, Didn't call every move right. If I listed all my bad trades today on one side of the page, the difference is that I cut my losses on each of those bad trades, didn't let them run. And was I short some of those Mays? Yes, at the wrong time. And it went in my face and I covered. That's what you do when you're a trader. You don't let it just erode everything you've done for the day. You cut your losses, move on. Cut your losses, move on. Cut your profits, pull them into your pocket. Cut your profits, pull them into your pocket. That's what you do. All right, let's get into this. NLY. So I'm just checking to see how I've done here with my NLY up here. NLY. As you can see here, they were buying in here, Annaly Mortgage. And this is, for instance, folks, for the year, Annaly was about an $11 stock at the tail end of February. And it's lost all the way down to, on the lows, it hit, $3.51. But today, Annaly was a $6 stock. And they were buying the October 7th calls. So October 7 strike, not 7th expiration. I want to be clear. So when they're buying those calls, they're betting on upside appreciation, obviously. 500,000 share equivalent, because that's what 5,000 contracts is. They paid 50 cents, which is $50, because you move that decimal place to over. So $50, 5,000 times. You get the idea, $250,000 trade. I tend to get interested when I see that. And they bought these aggressively. They have earnings end of April after the close. And that's probably not the earnings that are going to be important. It's further down the line. But they May, June, July, August, September, October, 6 months rather out into the future. Be aware of that. So those are bits of information that are embedded in the contract. Watch that. What's that look like? Well, there you see it coming up from 357 all the way up into the $6 range here now, $6.10 as we get into the tail end of our day. We've only got 45 minutes left. Second of our 3 at 3 unusual activity, GT, Goodyear. So take a look at this one. What did they do? They're buying puts, big time. They're buying the 5-strike puts with the stock at $6.61. And they're only out 3 months into the future because we've just had April expiration and they're May, June, July. 3 months out into the future. July 5 puts bought for 50 cents, 10,500. So a million share equivalent paid $50 a piece for these. That's a lot, folks. That's why I'm paying attention. These July 5 puts. Is this stock going to dive and roll over? Well, obviously a lot of bad stuff has been hitting this stock. There was the low. As you see, it's been at 5 a couple times this year. Could we return right back there? Well, if you're not selling a lot of cars, and nobody is selling a lot of cars right now, if you're not selling a lot of cars, you don't need a lot of tires. If you've shut down production lines, which in the case of General Motors, which was making respirators and so forth, if you're doing those kinds of things instead of making cars, you don't need as many tires. So that could be why Goodyear, we had that big betting that maybe this one goes lower. All right, that's our second of our 3 at 3. Last one, 3 at 3, take a look at Texas Instruments. Why? Because they've got earnings today, after the bell. TXN. What were they buying? Well, they're buying options that expire not this Friday, but May 1st. They're buying options that expire May 1st. So they want through expiration, through earnings, not just the earnings itself. They could have bought weeklies if they wanted that. They wanted something longer. Okay, that's a bit of information embedded in this trade. And what were they paying? $170 a piece for these options. So basically, they bought them from $170 up to $190. Again, I'm moving that decimal place over because every option is for 100 shares of stock. So we think that in all likelihood, somebody's betting that they have a good earnings report here. Now, they also have been buying calls all the way up to the 115 strike, and that was in yesterday's session. So 2 days in a row, they're buying upside calls. Today, they're buying those May 115s. Yesterday, they were buying the April 24 115s. Those are the ones that expire this week. What's that chart look like? There it is right there. So with the stock at 107.78 just moments ago, down 3.3%, they're buying these calls, paid $1.70 to $1.90, which is $170 to $190. That's why I pay attention. Folks, I am Jon Najarian. I appreciate you joining me every day for 3 at 3. Remember, you can always get great information from us over at Market Rebellion. If you want to learn to trade, we can show you that. You want to learn to trade crypto, that's coming out. You want a mobile app for trading and so forth, we've got that. All of this stuff over at marketrebellion.com. And tomorrow at 4 p.m. Eastern, I've got John McAfee, one of the brightest guys in cryptography, because he basically was, as you know, his name is basically like Xerox as far as people that want cybersecurity, because he had McAfee virus software. He's going to be on talking about cryptography, talking about cryptocurrency, talking about a wide range of things. What's he investing in now? What does he think of China and so forth? John McAfee joins me one-on-one tomorrow at 4 p.m. Eastern Time. You want to be there? It's free. You got to sign up, though. Go to marketrebellion.com and sign up. Join us tomorrow. You might be able to ask us a question, and that, my friends, will be something special. Tomorrow, 4 p.m. Eastern Time, right at the close of trading, John McAfee himself, the man, the myth, the legend. Tomorrow at 4 p.m. See you then.